morning, everybody, and welcome to Financial Planning Week. I just said to Rudolph and Rihanna online that we have had so much interaction with consumers this week that it has been absolutely brilliant. So, what is Financial Planning Week? Just to get you up to date, it is an initiative that is actually launched by the Financial Planning Standards Board in the US, which hosts World Financial Planning Day, which was yesterday, in conjunction with IOSCO, which is the International Association for Investment in the world, and FPI as a affiliate of the FPSB also then decides to take part in this, and therefore you will see that we've got quite a few things happening this week on the consumer side. The theme for this week is Live Your Today, Plan Your Tomorrow. And that is exactly why we've got our Certified Financial Planner of the Year, Rudolph Geldenhys, here to chat to consumers about how do you actually choose that very important person in your life. And I'm not talking about your partner or your spouse. I'm talking about the other important person in your life, which is your financial planner. So, Rudolph, I'm going to give over to you. I think if there are questions, just type them in the chat box for now, and we will deal with them afterwards. Rudolph, very, very welcome. Thank you for your time, and over to you.
Wonderful. Thank you so much, Nikki. Good morning, everybody. It's absolutely wonderful to be here with all of you. And I hope that our next couple of minutes together will be really insightful and that it will give you some food for thought and practical next steps to choose your financial professional. This is an important relationship in your life because it is somebody that will journey with you, not just over the next couple of months, but hopefully over the next couple of decades, to empower you to take your next step to reach your preferred future and make sure that you can move forward with comfort, certainty, and security. So I'm going to share my screen. I've got a couple of slides. Hopefully it's not a death by PowerPoint. And if there are any questions, please drop them in the chat. I'm going to try and see if I can touch on them whilst we're busy. Otherwise, I'll make sure that there's enough time at the end for us to touch on as many questions as possible before we end today. So the topic for today, as you would have seen when you registered, is choosing your financial planner. And I think it's important that we start with the following. What qualifies me to speak into this area? And I've been fortunate enough at the end of my schooling career to study at Stellenbosch University, where I completed my studies with a Bachelor of Commerce focusing in financial planning. I then went on to start my career in the financial services profession, and in 2014 I completed a postgraduate diploma in financial planning, and in 2016 I became a certified financial planner professional, something that all of us are very proud of, because you need to have ticked a whole bunch of boxes in order to wear this designation behind your name. You need to have proven your academic ability, you need to have proven your level of experience, and just the way that you work with clients and in the financial services profession around how ethically you are as an individual doing the right thing. In the States, I think they call it a fiduciary responsibility, always acting in the best interest of a client, which is a critical component. And then we need to have proven that we can write some exams. So it's a journey to get there. So anybody that you work with that is a certified financial planner professional will be someone that you can put your trust in, but it's important that you verify that as well. Then in 2018, I did a specialized postgraduate diploma in financial planning at University of Free State, which is all about investment planning. And then I was at a crossroads. As you can see, it's quite a lot of technical expertise that I've gained up until this point. But we've all been in a conversation where somebody just rattled off something. They heard that you were remotely interested in, let's call it, something about engineering. And then they spent the next 30 minutes chewing your ear off about how to determine the correct material to use when constructing a bridge in order to make sure that trucks can go over that bridge effectively. Wow, that's not exactly what you asked for. You pretty much just said, wow, that's a nice bridge. And that's an important element. The reason I'm making this anecdotal response is you want to make sure that the person that you are partnering with, your future financial planner, is somebody that really cares about you, more about you than they care about themselves. And what I mean by that is that their qualifications or the alphabet soup behind their name or the list of things that they've achieved in their lifetime and the awards that they win, that's nice if you ask. But if you didn't ask, then for them to make it about themselves will probably not be a very fruitful partnership, because it's about you. You want to know that they care about you and they want to see you succeed, and they want to make sure that when you take your next steps, these next steps are going to help you reach your preferred future, the future that you want for your life, not the future that I think you should have for your life. So instead of tackling another technical kind of qualification, I spent a bit of time just working on my human abilities, making sure that I can connect with another human at a deeper level, just maybe at a more personal level. And that's important, because if I'm not able to connect with you as a client, that's going to be really tough unearthing what you want out of life. If I'm not able to listen to you, if I continuously interrupt you, if I ever make you feel small, or I belittle you in some way, or you show me a bit of your financial life and I go, oof, I thought you would have had more by now. That is very hard to receive, and it's obviously not going to build trust. And you need ultimate trust in your financial planner, not blind trust, not a blind loyalty, or just do whatever they say. Or please never ever ever say whatever you want to do, just do it for me. You cannot abscond your responsibility on someone like us, but we want to partner with you and make sure that you are successful into the future. Then in 2013, I started my financial transitioner studies, and that just helped give me more practical experience around guiding clients when they navigate the difficulties of a changing life. Because if you have recently separated from your spouse, if you've lost a family member or a spouse, you've recently stepped into the next chapter of your life called retirement, or you've decided to sell a business, the numbers part is the easy part. Your life is the more difficult one, because we need to try and determine, what do you want out of life in this next season? And it's important that you find a financial planning partner that has got experience in not just the numbers, but also the person, because otherwise you might not get what you are looking for. And then I'm blown away by the fact that I get to put the next one on the slide. But earlier this year, I received the award for the 2024 Financial Plan of the Year for South Africa, which is an incredible honor. But it's important that you also know this does not make me the expert in this room. I cannot profess to sit here knowing that I know everything about everything and that I know what's best for your life, because I don't. No financial planner sitting in a room with you can tell you what you need to do with your life. You know what you need to do for your life. You know what's right. You've got that gut feel, that intuition. And in this partnership, we need to explore what's right for you and what would make the most sense. What would you be most comfortable with doing? Because ultimately, there's hundreds of ways to achieve your preferred future. For someone planning for retirement, it might be putting more money away into a retirement fund. For somebody else, it might be starting that business. For somebody else, it could be purchasing a property that they want to rent out and potentially flip this house because it's what they're passionate about. For someone else, it could be going overseas or putting more money into my business. So we need to go on a journey to find out what makes the most sense, and then we can also put it into some kind of tool to show you and demonstrate to you what the impact of your decision will be. Is it going to be better for you in your future financial position to purchase a property and rent it out? Or will it be better for you to purchase a share portfolio? Or will it be better for you to put more money in your company's pension fund? Or will it be better for you to take up that offer of an employee-employer match? And then you make the decision. Because I think there's not a lot of outcomes as disappointing as the one where I knew I was supposed to purchase that investment property, but the financial planner or my friend or my dad or my mom or my best friend said I shouldn't. And now look what happened to that property. But if we can help illustrate what the impact of this decision will be, and you ultimately are empowered to make that decision, I think we're more okay with the poor outcomes if we were in control of those decisions. So I think it's important to start with this. Before I tell you what questions to ask for your future financial planner, maybe it's a good idea to pause on this question. What is financial planning? And I'd like to start with this. Winston Churchill famously said, plans are of little importance, but planning is essential. Now, in the realm of financial planning, why would Winston Churchill's quote be so important? And it's this. Financial planning is about the process of developing a financial plan. It's about implementing the financial plan. It's about making sure that you're still on track with said plan. But here's the kicker. It's about changing or updating the plan, because when your life changes, your money changes. And when your money changes, your life also changes. So can you then have a financial plan that was created for you, by you, with you, in conjunction with you, in partnership with you 10 years ago, and you never looked at it again? You never made sure if it still meets all your requirements, if it's still going to help you reach that preferred future. You're going to be disappointed in the outcome, because that plan from 10 years ago is no longer the plan that you need today. So the process of planning is vitally important. And ultimately, you need to make sure that if you have a financial plan, that you also implement that financial plan. Otherwise, it's just a good idea. There are a couple of key areas of financial planning. That's also important, because it will help you determine whether what you have received or what you need, you will be receiving from said financial planner that you are interviewing. So the first area, and I'll touch on each area in a little bit more detail, is financial or debt management, tax planning and tax preparation, risk management or insurance management, investment or asset management, future planning or retirement planning, and last but not least, inheritance or estate planning. So if we look at what financial management or debt management is at a very high level, it's pretty much having a financial snapshot or summary about your life. If you sit with a financial planner, it's probably a good idea that you know where you are financially today. And if you don't know, you're not alone. Please don't feel bad or feel guilty if you're not in complete control about your financial position. That's okay. Most people aren't. You might have a sense of, I know I've got this kind of investment with Santam, only for the financial planner to tell you, you mean Sanlam? And oh yes, of course, Santam does the car insurance. It's pretty okay if you say, I know I've got an investment account somewhere, but I don't get those statements anymore. This is probably not your day job, otherwise you wouldn't be looking for a financial planner. So not being in full control of your financial life is okay. That is the point of employing someone like me to help you on that journey of being more comfortable about managing your finances. So part of getting a financial snapshot and getting a great summary would be getting clarity around your assets and liabilities, as well as your income and expenses. And that would be determining what income sources do you have, what is your rate of interest or inflation within your current life. It would be looking at your regular spending plans, as well as your planned debt repayments. Because ultimately, if you want to build wealth, you want to make sure that you're debt free. If we speak about your net assets or your net worth, if you have 200,000 rands worth of investments and you've got 200,000 rands worth of debt, you've got zero. Okay. And that's fine, because it's a journey, right? Oftentimes we feel, but if I take this 200,000 rands worth of assets to pay down my 200,000 rand of debt, then I've got nothing. Well, is that very different from the position that you're currently in? But I'm telling you now, without debt, you've got more money, which means you can accelerate your future savings and building up significant amounts of wealth. So that's an important part in this financial planning process, is having a financial snapshot and making sure that you've got a good game plan on hand. And when we look at things like your regular spending plan or your income sources, it's important when chatting to your financial planner that you don't think about just your current situation, but also your future situation and position. The other one would be, what planned savings or investments do you want to make? The second key area is all about tax planning and tax preparation. We want to make sure that you're tax efficient. Just because we can't evade tax does not mean we can't avoid it. Now, will SARS like hearing me say that? Absolutely not. But we can legally avoid tax. We can't evade tax. So, in everything that you do in your future journey with your financial planner professional, you want to make sure that you are paying the least amount of tax. Any decision that you take, you need to consider the impact of current as well as future taxes. And it's not just income tax, it's also estate taxes like estate duty. And these are important things that we need to consider when we make decisions around strategies and structures. So we need to have a sense of what's going on in the current tax laws. So your financial planner may or may not be a tax practitioner, which means it's somebody that can submit your tax returns on your behalf. They do not necessarily need to be a tax practitioner. They might have a separate business or a relationship with a tax practitioner that can help you, but they need to have some kind of sense of what's going on in the current tax laws. They need to get a good sense of your current tax position. So it might be good that your financial planner asks for your latest income tax assessment. It's called the ITA 34. If you've submitted your tax return, you would have gotten a copy of your ITA 34. If you didn't get it, your tax practitioner will be able to send that on to you. And why is that important? Well, it will give me a good idea of where your income comes from and how much tax you pay and what tax deductions you are making use of, so that I can give some advice around how to become more tax efficient or how to draw income from different places so that you pay less tax at the end of the day. Then tax structures are critical, and to get a sense of your marginal tax rate as well as your average tax rate. We want to make sure that based on every rand of income that you earn or draw from your investments, whether in retirement or currently, you want to make sure that your average tax, so the couple of cents per rand that you pay, is low and as low as possible. Because your marginal tax rate is one thing. It's one thing having a marginal tax rate, and what that would look like would be if you earn 300,000 Rand a year, for example, it would put you in the 18% tax bracket. Now, I'm making this up because I didn't check the tax tables before. You can go onto the SARS website and get the current tax tables. But let's just assume that based on 300,000 Rands worth of income, that you're in the 18% marginal tax bracket. That does not mean that you're actually paying 18 cents on every Rand that you earn. Because as an individual, you get some rebates. And if you make contributions to retirement funds, you pay less tax. So we want to calculate what your average tax rate is. Because marginal is one thing, but on the other side, we want to make sure that your average tax rate is as low as possible. And maybe to give you some guidance as to what is practically possible, we recently did some work with a client, and prior to us restructuring their future income plan, because they just stepped into their next season of life called retirement or choosing not to work, and they were drawing about 700,000 Rands worth of income from all of their different sources, and they were paying about 200,000 Rands worth of taxes. By doing simple product restructuring, we were able to increase their income to R1,000,000 a year, and they were able to drop their taxes to about 75,000 Rand a year. That's a good deal. And it's simply because they had multiple different products to choose their income from. If you are maybe in a different position than this client. You might not be able to get your average tax rate as low as this, but having a 10% or lower average tax rate is absolutely possible. You just need to know what rules to play with and how to be a little bit more tax savvy. And then the taxable nature of your assets and liabilities will help your financial planner determine where to draw from or potentially how to mitigate some of the taxes that you're paying. The next area of financial planning is risk or insurance management. And this is everything long-term, short-term, or health insurance related. Over insurance is costly. Having too much life insurance is costly because you miss out on the opportunity cost of what that premium could have done for you. If you only needed R1 million worth of life cover and you're sitting with R5 million worth of life cover, that means that your premium is 5 times higher than it should be. So what could you have done with that balance of 4 times? Could you have saved and invested? Could you have been generous with it? Could you have paid down your debts faster? Could you have purchased another property? Or could you just have enjoyed the money? Could you just have gone to dinner with your spouse an extra time in the month? Or went on a weekend away with close family or friends? But on the other side, being underinsured is just as costly and just as risky. So it's important that when you're meeting with your financial planner, that you consider your risk or health factors, that you consider things like waiting periods, penalties, and exclusions on your medical aid and on your life insurance products. It's important that you consider the loss of income or the ability to work in the future due to an illness, injury, or disability, that you've got peace of mind. Because ultimately, you want to make sure that the current insurance that you have or do not have is balanced out to what the insurance is that you actually need, because that'll help you determine if you're over or under insured. Then the next area is asset management or investment management. And this is a conversation that dives deeper than the product. Asset management is not just having a conversation around that retirement annuity account with Alan Gray, or having a fun conversation with your planner around your stockbroking portfolio at PSG. It's more than just being worried or frustrated by the fact that you've got not enough money in the bank and you're not sure what would happen if there's an emergency, and oh, can you believe the fees on that account? Now, all these things are critically important, but we need to take a deeper look. And ultimately, what I've come to realize is the only free lunch in investing is asset allocation. What does asset allocation mean? Well, it's the split between how much money is invested in South Africa, how much money is invested outside of South Africa, how much money is invested within the South African stock market versus the global stock market, how much is invested in property, and how much is invested maybe in the bank. Because the combination of all those things will be the only thing that drives your investment returns. Your investment returns are not driven by the product. You can have the same investment return. For example, let's use a round number like 10%. In order to achieve your future goals, you need an investment return of 10%. 10% is not determined by the fact that you're invested in a retirement annuity or an overseas investment portfolio. What determines the 10% return that you get or ultimately do not get is what you're invested in. Unfortunately, if all your money is invested in the bank, you will never be able to achieve a 10% return. If all your money is invested in local and global shares, you might exceed 10% in return over time. I mean, the South African stock market, I think, over the last 20 years gave us an average return of 14%. Now, if you only needed a 10% return, why do you want to take on the risk and uncertainty of a investment strategy that will give you a investment return of 14%? Because it comes with a lot of stress. I mean, there was one year, if I look back, like in the mid to late 2000s, where the stock market declined by 27%. Now, over the last 20 years, your average return was 14% in the South African stock market. But just like sitting in a portfolio where your value drops by 30%, that's very hard. And what often happens in those spaces of time is that we get very stressed and then we just decide to sell our investments. So when we consider investment or asset management, we need to consider asset allocation. We need to consider voluntary or compulsory investments. So the voluntary investments would be anything that I can access at any point in time. Money in the bank, my tax-free investment account, a unit trust. And compulsory funds would be anything long-term retirement-based. Retirement annuities, your pension fund or provident fund at work. It's important to consider your investment time horizon. How long am I investing for? What is going to help me achieve my goal? Because an example of that and why it's important to consider this when it comes to asset management is if you want to go overseas next year, you want to plan a family holiday December 2025, and you decide to invest in a 5-year endowment product. It doesn't really match your investment time horizon because you need to liquidate that investment in a year and 3 months from now, or maybe a little bit sooner to pay for your flights or your visas. And now you're sitting in a 5-year product where you can't get some of your money out, or there's penalties to take it out. Then you need to consider the investment's risk, uncertainty, and volatility and see if that matches your requirements. And then ultimately, I think it's one of the things that I mentioned, you need to consider that your required investment return, in my example of 10%, matches your portfolio's ability to yield that return. So all your money in the bank can never give you 10%. So there's a bit of a mismatch there. And then future planning or retirement planning, it's honestly trying to answer the question, where are you going? But more important than that, why? Why are you going there? Because if we as financial planning professionals understand your conviction, it's easier for us to help put a plan together to make sure that we get you there. Because incorrect assumptions lie at the root of every failure. If we incorrectly assume inflation rates, or more importantly, your inflation rate, then we're going to have a disappointing outcome into the future. If we say that come retirement, you want to draw 10,000 Rand a month, and we estimate that your income only needs to grow by 6% every year, but your personal inflation rate is 10%, you're obviously going to run out of money, or you would not have been saving enough to make sure that you can do that. And that is a very disappointing outcome and detrimental to your financial position. So what can we do when it comes to future or retirement planning? We can do some scenario planning. We can clearly identify the dates, the times, the places, and the people that's going to be on this journey with you. We're going to determine your income sources and your estimated future expenses. We're going to consider things like life expectancy and income drawdowns. And really important, going back to the second area, is the impact of taxes. And then ultimately, what future or retirement planning is supposed to do for you, it's supposed to give you peace of mind. It's supposed to give you future certainty. You don't want to wake up one morning and wonder, yes, am I actually on the right track? You want to know, no, I'm not yet on the right track, but I will be. Or imagine waking up tomorrow and you go, I'm on the right track. I know that if I keep the course, if I stay the path, I'm going to get to that preferred future that I've always dreamt of. I'm going to reach that future point that my family could never have, but now I can give it to my kids and my kids' kids, and we can start building generational wealth. Even if we start small, now it can have a significant impact on our future. And then the last one, and certainly not the least, is inheritance or estate planning. Because honestly, it's not a matter of if, but it's a matter of when. We aren't going to live forever. But if we have the difficult conversation now, it will ease the difficult conversation and it will ease the difficulty later. So talking about your last will and testament, it's not easy. Talking about the guardians of your young children with your spouse is a terrifying conversation. But if you don't have it and you avoid it, what happens in the event where a worst case scenario comes to pass? We've got 2 small kids. We've got a 7-year-old and a 3-year-old. My wife and I needed to have the difficult conversation. If we were to pass away in an accident, who's going to look after our kids? We know there will be people who want to look after them, but I don't necessarily want our families So my family and my in-laws fighting over where the kids go. There should be clarity and certainty so that the transition phase from our home to this guardian's home for our kids is seamless, and they don't have to get drawn into court cases and legal battles because there's more people that want to look after them than is practically possible. So important conversations. Rather have the difficult conversation now. Rather cry now than have your kids cry or your family cry because you didn't take care of this really vital component. Then you need to consider things like testamentary or living trusts. You need to consider the income needs of beneficiaries, and you need to consider minor beneficiaries, their guardians, and their assets. And ultimately, what inheritance planning or estate planning is all about is your wishes executed perfectly. You want to sit with somebody and say, you know what I would love in this worst case scenario to happen is that my wife and my 2 children are taken care of, and that the family home isn't in risk of not being kept, i.e. there's not enough income coming into the household to make sure that we can keep our family home. That's what I want. Then your financial planner can sit with you and go, you know what, this is possible. We can make it happen by adjusting your last will and testament in this way, or making sure that these provisions are in your will, or making sure that your life cover is correct with the right amount of cover and that your beneficiary nomination makes sense. We've been able to control the expenses within your estate. That means that your estate will be taken care of, and there will be enough money to make sure that the income that I brought into the house will remain for the amount of time that I need it. And that will give me and my family peace of mind that if I've got to travel, if I've got to get onto a plane, if I've got to get into a car, that I can do that stress-free because I've taken care of the most important people in my life, which is my family. So, where do we start? I would say that it starts with an important question. What kind of services are you looking for, right? Don't you think that's a great place to start? If you're about to start asking financial planners whether they're the right fit for you, you probably know what you probably need to know what you are looking for. And more than that, you need to know what kind of relationship are you looking for. Is it transactional or is it a long-term partnership? Because both are okay. You don't need to have a long-term relationship with a financial planner. I would even argue that you might not need a financial planner at all if you know what you are doing. But if you don't know, or your life is complicated, or you have got a decision to make and the impact, if it doesn't go according to plan, is irreversible, then you probably need a good sounding board and a partner to help you navigate the complexities of life. But why I want to start and preface this conversation with you don't actually need a financial planner is because our financial planning profession and the South African financial services sort of structure has increased and become more open. So financial planners aren't the gatekeepers to accessing financial products. If you know, because you worked with a planner and they help determine that you need R1 million worth of life cover, you can go do it yourself. You can hop onto the FNB app and purchase R1 million worth of life cover. You can literally phone a couple of companies and get R1 million worth of life cover. So you don't need a financial planner. But I can tell you that we've got clients who are absolutely fanatical about our relationship or the relationship that they have with us. We are worth gold to them because we've helped them get clarity around their future. So it's important that you figure out what services are you looking for and what kind of relationship are you looking for. And there are a couple of different business types. If you want to start approaching financial planners, you get solo planners, you get financial planning businesses, and then you get your larger corporates, which none of these are right or wrong. There's not one that I can say, you know what, you need to approach a solo planner or a large corporate. It's really back to what kind of services are you looking for and what kind of relationship are you looking for. And a solo planner practice would be one financial planner giving advice with some support staff. If you want to consider a financial planning business, it could be one or more financial planners with a couple of support staff, and they could be local, they could be national, or they could even be global. So it could be somebody with a practice in Durbanville, where I sit, as well as a footprint in Johannesburg. And if you travel or you got family on both parts, that might be a very good fit for you. And then we've got our larger corporates where they've got multiple planners, multiple support teams. They have got a local, national, and a global footprint, and they potentially are multi-entity. This is a company like PSG, for example. They've got almost 1,000 financial planners spread out all across South Africa, and they've got multiple entities. So if you live in Stellenbosch, you can hop into a PSG Stellenbosch office. If you live in Durbanville, you can find a PSG Durbanville in all likelihood. And if they don't have one, they are probably looking at starting one in any event. So they have multiple different business units. They've got a short-term insurance business unit with great staff that are specialized. They've got a financial planning arm, an investment arm, a stockbroking arm. They can help you in all the different facets of your life if you need it. So again, go back to the first slide. What kind of services are you looking for, and what kind of relationship are you looking for? And then what I would recommend that you look for as a client is this. These are the intangible things, but this is probably the most important starting point. I believe that you're looking for trust. Can I trust the person that I'm working with? You're looking for longevity. And this is maybe where I can punt myself a little bit. I'm 33. So if you're about to step into the retirement phase of your life, you are about to turn 65. Having a financial planner that's 65 is great because they've got the experience, but they're probably also about to retire. So who's going to see you into retirement and through retirement? Because you probably need to find a partner that will help you navigate the complexities of getting older, as well as the complexities of the transfer of intergenerational wealth. If you've sacrificed your entire life to build up a wealth that you want to transfer to your children and your grandchildren, and you've trusted this partner, you want them to see it through so that there's a successful handover. So longevity is important. You want to make sure that the person that you are talking to is authentic, that what you see is what you get, that what they say that they're going to do is what they're actually going to do for you. And then you want somebody that's got some purpose and that's passionate about what they do. I think you can pick it up in a conversation when somebody is really like into what they're doing. Because if they're really passionate about what they do, they're probably better at doing it. If you've been to any kind of medical professional, you know, the ones with a really good bedside manner, don't you just refer like tons of people to them? And yes, we sometimes go to these highly qualified, highly recommended specialists. But it's interesting if you look at the statistics around complaints from patients, that I think it's a ridiculous amount of specialists with good bedside manner are 7 times less likely to have a complaint brought against them. So 7 out of 10 patients would complain against the best specialist because they didn't necessarily seem to care about them. So the thing that probably would have gone wrong, whether you went to the best specialist or just the really nice one, it would have happened in any event. But people complain against the hardcore good specialist because they portrayed themselves as the specialist where nothing would ever go wrong, and they didn't really have a bedside manner to take you through the risks. So maybe it's good to find somebody that really likes what they do. And then lastly, probably the most important, is there an alignment of values? If you are a person with a family and your kids are the most important thing in your life, I would argue that a financial planner with children might be better suited. And please don't hear what I'm not saying. And if there's other financial planners listening, please don't send me angry emails. I'm not speaking about you directly. But somebody that's got kids probably understand what it's like to have them and how to plan for them. Or they can probably understand why you're willing to put yourself second and put your children first. So an alignment of values is critically important. And it could be a whole array of values. It could be family values. It could be values around travel. It could be values around how you see the world and how you see risks. Alignment of values is really important. So where do you find a financial planner? That's probably also a good place to start before we give you some questions of what to ask this financial planner once you found them and know what kind of services you're looking for and what kind of relationship you're looking for. One of the best places to be would be the FPI website, the Financial Planning Institute of Southern Africa. If you hop onto fpi.co.za and you jump onto general, right at the bottom, you'll see find a financial professional. It takes you to a different website, and then you'll be able to type in the name of someone or the area that you reside and scroll through the list and see if there's somebody that resonates with you. The other one that I would recommend quite highly is a referral from a friend. There's nothing quite like that trust of a friend saying, Rudolph, you do not speak to anyone else other than Nici. If you don't speak to Nici Macdonald, you're making a big mistake. Why would you want to take a referral from a friend? Because hopefully they're not getting paid by said other friend, but they maybe have a good experience of what worked for them. And then Google can be your friend as well. You can read some news articles about some professionals, and then you can also consider approaching some people who are on TV or radio. Now, I also want to mention, if you think that they don't just allow anybody on TV or radio or anybody to have a website, you are sorely mistaken. There's a lot of people writing articles, a lot of people appearing on Google, a lot of people on TV or radio or the news, and please don't send me angry emails. But they just happen to be there. They were asked. That does not necessarily make them an expert, but I also don't mean that they don't know anything. They are obviously a subject matter expert, but whether that person is the right person for you, that remains to be seen, and then you need to ask some good questions to said individuals. So how to find a financial planner? Well, I would recommend that you interview more than one. If you've got a good feeling and it's a referral from a friend, maybe one interview is enough. But if you're not quite sure, because honestly, this is quite an important relationship in your life, and this is one that takes time to build trust in, and these are multi-year, multi-decade relationships. So you wouldn't just walk into a dealership, test one car, and sign the papers. You're going to do your homework, because this car costs you a lot of money. A financial planner is going to cost you a lot of money too if you choose the right one, or they're just going to cost you a lot of money in any event because we don't work for free. So you're going to pay them. So make sure that you pay the right one. Same with if you purchase a house. I've never heard anybody that I know that bought a house would go and hop onto Property 24, literally pick the first house that they see, don't look at the ad, don't go view the house, phone the agent, put in an offer, and just buy the place. That would be stupid. So why do we want to do that with our financial planning professional? And then lastly, ask questions for clarity and comfort. You don't want to walk away from that interview and wonder, oh, I've signed up now. They've taken an appointment on my products. They've given me a financial plan, but yes, I'm actually not quite sure how they work when it comes to fees. But now it's too late. What if they're offended? Ask those kind of questions up front. So if you're ready to go, I'm ready. Let's look at some questions to ask. I think probably the most important question to ask is, do you have a financial services license? Now, this might be an odd question, and you don't need to ask it. You can ask their website, because on every financial services provider, they need to, at some point on their website or branding or stationery, have their financial services license number. Because in South Africa, you need to have a license to give advice. I can hop onto social media and make a video, and you might have seen a few of my videos, and I can give general financial planning, educational advice, like, hey, this is how a retirement annuity works. Anybody can do that. But in order to give you advice that makes sense for you, if it's not just basic product knowledge, if it's not just something that you could have found on Google and I just happen to condense it for you. If I say, listen, Nici, you need a retirement annuity, and I would recommend we consider Alan Gray, and I recommend we invest in the Sanlam Balanced Fund. That's advice. That's tailor-made advice to you. I can't do that without a license. And secondly, you need to know if they're licensed to give advice on the services and products that you need help with. So if you only need investment advice, and they're only licensed to give you advice on life insurance. Even if they want to help you and they profess that they can help you, they legally can't, and they also shouldn't. If you are hoping to get holistic financial planning advice, advice around your medical aid, your estate planning, your life insurance, your company structures, your car insurance, your investment planning, and they're only licensed to give you advice on medical aid or employee benefits, like they can only help corporates. They speak to, for example, SPA and help them figure out something for their employees. They will not be in a position to actually help you. So it's critically important. Another one that I would recommend you ask is, are you a certified financial planner professional? Does this mean that if someone is not a certified financial planner professional, that they can't help you? Absolutely not. A lot of people are still on their journey to attain the certified financial planner professional designation. But what does the CFP mark give you as a client? Well, it'll help you establish their expertise and their experience. There's a couple of hoops that I had to jump through that I touched on at the start in order to attain and continuously use my certified financial planner professional designation. So that's a good question to ask. Another one would be, tell me about your company and your ownership structure, because that'll help you establish independence. It'll help you establish their conviction and their cause. If they are owned by a product provider, so within our organization, WealthUp, we do not own any products and we aren't owned by any product company. But if your financial planner or prospective financial planner is owned by that, that does not mean it is a good or a bad thing. That does not make them a good or a terrible financial planner. It would simply help you establish the reason for their advice. So if I work as a certified financial planner at Sanlam, because I have got a great relationship, there's great expertise within their fiduciary teams, their legal teams, I've got access to world-class business units. The only thing that my relationship with Sanlam will mean is that it will not mean that I'm not independent when I give advice, because I can still give you advice on buying a property versus investing. But when it comes to implementation, I just found that I just love executing my advice with Sanlam. I love the Sanlam Life Insurance as a financial planner, and I think the Glacier investment platform is absolutely fantastic. I get great service, and my clients are in a good position when they have these products. Then at least as a client, you know that you will end up in a suite of Sanlam products. And if that's not a problem for you, then it can be a great relationship. But if you're expecting them to help you keep your investments that you've currently got with Alan Gray, and now you're upset that they are recommending you move it to Glacier, well, you probably could have established that by asking them about their company and their ownership structure. But again, no right or wrong. This is all personal preference. Another question to ask would be, how do you do financial planning? So the process that they follow will give you insights into the depth of their planning process. So let me give you an example. Come to me and ask me how I do financial planning. Well, Mr. or Mrs. Client, we will have 1 cup of coffee. We'll spend time for 20 minutes. We will punch some numbers into the screen, and you will have a financial plan ready to go, which caters for all your needs. Just like, I would hazard a guess that your life is more complicated than 20 minutes. Were you able to touch on the things that you are really concerned about, your fears, your hopes, your dreams? Have we been able to touch not just on the technical side of money, which is all the 6 areas that I mentioned, but were we also able to touch on the personal side of money? Were we able to clearly define what it is that you're looking for into the future, beyond the money, beyond the numbers? Because I think financial planners need to help you align your money with your preferred future. Apologies. So a 20-minute conversation might not cut it. So in our scenario, how we do planning at WealthUp is we have got 3 individual meetings with clients, and only in the fourth meeting do we present the financial plan, and then clients can self-implement that financial plan or implement it in partnership with us. So we have 3 key meetings, where the first one is to establish your financial snapshot. The second meeting is we don't talk about money at all, and we just look back over your life and figure out how did you get here, because how you grew up is vitally important in how we plan for the future. And our third meeting looks to the future, where we do some scenario planning and figure out what do you want out of life and how do we make sure that the numbers can help you get there. And only then do I feel like I've got enough data points to give you a financial plan that we co-created that will resonate with you, and then you will feel like, wow, this financial plan is me. And then you can execute that because it'll help you get to the future that you've always wanted. Another question to ask would be, how do you get paid? Critically important question, because it'll help you determine affordability. Can you afford Rudolph? And secondly, if you will receive more value than the fees that you pay. Because nobody works for free. That's an unfortunate reality. You don't show up at work every day and do it for the love of it and maybe a cup of nice coffee because you've got an espresso machine at the office. That would be absolutely absurd. So same with financial planning professionals. We do charge fees. And it's important that you know how we get paid. Is it fee only? Do our planners get salaries? Do we charge on the investments? Do we give you an invoice? Do you have a monthly retainer or debit order, or do we only earn commission? And do we disclose what that commission is? Hopefully the answer is yes to all of those, and a combination of different fee models. But it's important that you've got clarity and comfort about how your financial planner will get paid. Another question would be, how often do I see you? This will help you determine whether the amount of touch points that you will have with your financial planner in a year meets your requirements. Within our organization, some of our clients have got 4 touch points a year. I know clients that will say, no thanks. I don't want to see you that much. You're nice and all, but I've got things to do. I'm running a business. I want to see you once a year. It's going to be highly effective because that's how I run my business. Are we on track? No. What do we need to get? What do we need to do to get back on track? Let's do it. Implement. I'll see you in 12 months. But if you want 4 meetings a year and I only give you 1 meeting a year, you're going to be disappointed. And then you're going to feel that, wow, the fees that I'm paying is not commensurate to the service that I'm getting. Another question to ask would be, how will you communicate with me? And this will help you determine whether the way that the planning is executed and the relationship is managed will resonate with you. Is it in-person meetings or virtual? Do we WhatsApp? Like, can I phone you? Is it only email? Can I only see you once a year? Or what if halfway through the year I get a new job offer? Can I come and unpack that with you and soundboard that with you? Like, how do you actually submit your financial plans? Is it just like a 300-page, like Times New Romans 10 like script? Or is it pictures, or is it a combination? Because I work best with visuals, and can you communicate with me in visuals? And then here's another good one. What are my responsibilities and what are yours? This will help you determine whether the partnership fit and what the rhythms of working together would look like. Because as I mentioned briefly a little bit earlier, unfortunately as a client, you cannot abscond your responsibility of your own future financial position to someone else, because it is not my money. Even though I really care about you as a client and I want to see you succeed, I don't feel the same weight of that responsibility as you should, because it's your future. Because ultimately, I can take some responsibility with you, and it's about keeping you accountable to the things that you want out of life. But I can't be held responsible for your own life. If you don't come through with the financial plan, you don't actually make the investments you said you were going to make, and your financial plan falls flat, that cannot be solely my responsibility. So you need to be empowered to make these decisions. And then, what would make you the right financial planner for me? And this will ultimately help you determine the alignment of values. And this is quite a subjective one, so you might need to give them a little bit of insights as to how they can position themselves to see if there's overlap. But it's a good question to ask. And I think this is the last question that I have. Are you open to sharing an example of your work? Because honestly, if they are proud of the work that they do, you should get a resounding yes. And don't be worried that as a client, we give your financial plan to other clients. We've got an example of a financial plan that is anonymized. So it's a Mr. and Mrs. Smith kind of financial plan. And then you can see the quality of our work. So I hope that this was helpful. I see that we've got only 5 minutes left for conversations. I've got a bit of time to run over. So if you need to run at 11, that's absolutely perfect. I can definitely stay a few minutes if Nici can, if there's good questions. Scan this QR code. It'll take you to some of my social media. If you want to connect with me, reach out, say hi. That'll be absolutely wonderful.
Rudolph, thank you so much. That was so interesting. And I was actually sitting here, asking the questions beforehand. It's making sure that you just hit that right spot. How are you getting paid? And one of the things I think that is so, so important is, as you said, you are allowed to shop around a bit for someone who you can speak to. I think that trust and that relationships that you're building with that person, you don't necessarily marry the first person that you meet. I mean, sometimes it's a bit
100%.
of trial and error. And because you're going to work so closely and share so much personal information with your financial planner, it is so, so important you absolutely build a relationship with that person. And if it's not the first person you see, well, then so be it. No financial planner will feel bad if you tell them, I'm not continuing with this relationship.
I absolutely agree with you. I see somebody just asked for the QR code. You can absolutely shop around, and you should. I think you're going to disappoint yourself if you don't shop around. I think if you do not shop around and you get somebody that doesn't tick all the boxes, the only person to blame is yourself, and it's not a blame game, but you want to make sure that there's a resonance, that you want to pick up the phone. And on the flip side, I want to make sure that, Nici, you and I can work well together. If we clash the whole time or we didn't have a relational fit, I'm not going to be able to service you in the way that I believe you should be serviced. So it's good that it's a joint meeting of the mind saying, Nici, do you like me? And I like you. I think we can work together. It's a really important part. I see that there's Albertus asked the question, how do I
Yes,
get paid?
I was going there just now because I think that's such an important comment. Because there's so many, rumors flying around about, you get scammed and you get paid, but you don't know. So, Rudolph, over to you on that one, please.
Yeah. So every organization is different. I've got a lot of wonderful friends in the financial planning profession that have got all different charging models, and they'd love to tell you all about it. But how do we do financial planning at Wealth Up? So we've split our ongoing client relationship or partnership from the financial planning. And why do we do that? Because, as I mentioned right at the start, not everybody needs a financial planner. But we want to make sure that the financial plan you end up getting resonates with you. So we charge a set upfront fee for the creation of the financial plan. So you pay me for advice, not for products. You walk away with clarity around your next steps and a financial plan, physically a book that you get to take home with you that details all the next steps you need to take to reach that preferred future. And why did we split the two? Because it's two different disciplines. The art of financial planning or creating the plan is different than the relationship that we have on an ongoing basis to make sure that you remain committed and progress on your financial plan. So we've said, we know that there's a lot of clients that want a financial plan, but they're not yet sure if they want a financial planning partner because maybe they've got hurt in the past, maybe they've heard a couple of things that they're concerned about. So they just, for the time being, want to pay somebody to get advice. They don't want to end up with products. So we said, let's help clients get a financial plan. And then at the end of the process, because you paid us for the plan, you take the plan and we never have to see you ever again. You can self-implement that and everything will be in the document. You can also, if you've done our financial planning experience with us, you can also then book hourly consultations to make sure that every now and again you're still on track. But only once you've gone through the financial planning experience, after which you paid a upfront fee, then you can say, Rudolph, I really like you guys. I think you are the people that I've been looking for. Can we partner together? Then we say, absolutely. Then we look at our partnership agreement, and we've got a minimum annual fee that we need to earn per client family in order to make sure that we can allocate enough time and resources to effectively manage that client relationship. We want to make sure that we're available and accessible when you need us most. And if we've got 500 clients, it is very hard to do that. So then we would come to an agreement on, let's say, our financial planning fee, for example, is 40,000 Rand. You walk away with a financial plan, and the minimum annual fee we need from a client family is 40,000 Rand a year in financial planning fees. How you pay that 40,000 Rand a year, I mean, that's up to you. It can come from the investments, it can come from the insurance, it can be an invoice, but we will clearly tell that to you. On all of our client meetings, we say, what did we earn from our clients over the last 12 months? And what do we expect you to pay over the next 12 months? And then we've got a formula to determine the fees, and each practice works different. I know practices that don't charge assets under management fee. They've got debit orders. If you want to be a client of mine, you pay 2,500 Rand a month, and I do everything and anything for you until such a time as you don't want to pay me anymore, which is hopefully never. But that is maybe a glimpse of how we work. But on the other hand, other financial planners are really good when it comes to specialist product knowledge. So they just like executing life insurance. And we need those people because you need to be a technical expert when it comes to life insurance. And how they get remunerated is based on the commission that they earn from the product that they help you implement. So if they help you to correctly identify your need, and you decide that this 1,000 Rand a month premium makes sense for you because it caters to your requirements, then they will earn 10,000 Rand in the first year and about 3,000 Rand in the second year. And every year as that policy increases, they get a bit more commission. As long as you're okay with that and they've disclosed it, that could be a wonderful partnership. But these are sort of the different charging models available.
If I can just add to that, I think Rudolph, I know Rudolph spoke about the fees that they charge for a financial plan initially. And I must also say Rudolph works in the really high net worth category. So don't be scared about the numbers that Rudolph put out there. I think if you speak to a few financial planners, you will start getting an idea of how they're remunerated. And as Rudolph said, there's very different type of models, because for someone who's, for example, just starting out, do not have a big wealth base, just earning a salary, maybe wants to purchase a property, that type of person, something like that type of money is just not available for financial planning.
Absolutely.
However, in those cases, the financial plan and the financial planner then getting remunerated if there are products that are implemented to solve your problems, means that it's no extra money out of your pocket up front.
Yes.
So there's a way and a shape for every single person. And then as you grow your wealth and as you need more detailed financial planning, I think that is important, that you will then get to the point where you need someone to draft this enormous financial plan for you. So wherever you find yourself in your journey, there is a financial planner out there who will assist you in getting the right advice, the correct solutions. So that's why we said shop around a little bit. Don't be put
100%.
off. Don't be put off by the first quote you get. Go speak to someone else. And I also think from a practical perspective, what we used to do when I was still practicing, it's very important that you understand rand and cent wise what you're paying.
Yes.
It is very easy for a financial planner to tell you, I'm going to earn 0.5% per year, but they have to put it doesn't tell you exactly what you're paying them. So they have to be upfront with you and say, well, this is what the 0.5% a year relates to. So this is what it's going to cost you, so that you know exactly. So I think that's very good advice. I see we're over our time. So thank you so much, everybody, for joining. Thank you, Rudolph, for your time. I hope this was valuable and that everybody learned something. And if you need any further information, as Rudolph said, if you want to find yourself a financial planner, go to our websites. It's both on fpi.co.za, but also on fpimymoney.co.za, and find yourself a financial professional that is in your area to help you today. Thank you so much, Rudolph, and thank you, everybody, for listening.
Bye, everybody.